Welcome back to our channel, traders. Welcome to TRADEPRO Academy, where we cover everything related to futures and futures trading. So I hope you guys are excited for yet another video, because today what we're going to be talking about is trend reversals and how to actually pinpoint them with volume. Often traders, and you might be in this situation yourself, you find that markets are trending, and you look at this as an impossibility, right? It can't keep going up, it can't keep going down, right? Let's start fading it and counter trend trading it. Until, right, you finally agree that the trend is going to continue and you get late on the trend, only to just continuously lose money and get stopped out. So in today's video, what we're going to be doing is trying to navigate that, right? I'm going to show you multiple ways on how you can actually avoid getting chopped up against the trend and pinpoint where these trends are going to turn with just a few specific reversal signals on the charts. So if you guys are super excited about this video and where you can find these large reversals on an intraday and a multi-day basis, hit that like button, hit that subscribe button, and drop a comment down below. So right now we're going to be diving into the thing that moves price the most, volume. So let's go ahead into this intro and we'll see you guys on the other side. First and foremost, let's define trend reversals and trends in general. Markets typically move in three different trends. Now, they spend about 70 to 80% of their time in a sideways compressive zone, right? Where you get a range motion, right? A lot of the time is spent here where there's no new information that enters the market, and we expect a move that pushes up or down that's expansive, right? So these expansive moves are a much smaller percent of the time of the market movement. Now, when we talk about reversals and trend reversals, what we're talking about is how to pinpoint the actual end to one of these trends so we can actually find the opposite move. Because often traders, right, they miss the original move and they look to counter trend fade it because they're not on the right side of the originating move. So I'm going to be breaking down how to actually, number one, avoid getting beat up trying to counter trend trade it, and number two, how to pinpoint these market reversals using just volume. So the main concept that we're going to be using, as you might have guessed, right, is going to be a volume profile, right? We're going to be basing this on individual volume profiles. What we're going to be using is a combination of cumulative volume profiles and individual session-based volume profiles. Now, the platform I'm going to be using is Sierra Charts here, so don't get confused. There's a lot of platforms out there that actually allow you to do what I'm going to show you today, but for our sake, let's use Sierra Charts. Now, the volume profile, we've done multiple different videos on it, right? What it represents is volume at specific levels, right, based on a specific time period. So if I choose an individual session volume profile, there's going to be two sessions in the futures market. Let's use the S&P 500, the evening or ETH, and then you have the regular trading hours or the New York or Chicago session, right? So what we're going to be doing is splitting up multiple different profiles here to get an understanding of where strength and weakness are in moves and in trends. Now, the volume profile, what we're going to be doing specifically here is that on a session-by-session volume profile, we're actually going to be breaking down no value areas. So we're going to see the different levels of volume within the whole profile based on a color scheme that's representative of a percentage of the point of control. So what we look at here is where volume actually gets thick or thin, which allows us to create a hypothesis on the trend reversal. Now, volume profiles, right, they're an amazing tool to understand where volume sits in price and how you can actually find massive pivot and reversal areas. So not only are we going to do that, but we're going to add a specific theory-based approach to volume profiles that allows us to find these reversals. Now, you might have heard of volume profile shapes, right? We're going to go through all of this when we look at the screen, but I do want to introduce you guys to volume profile shapes, right? Before we talk about that, the notion of traders that actually move the market can be split up into two separate categories when we talk about volume. Strong-handed traders and weak-handed traders. Naturally, if we look at volume at its core, it is the main aspect that moves price. So if there's heavy volume, what's going to happen is price is going to move, right? So if we use a cumulative and an individual session volume profile, what we're looking for are actually strong-handed traders, right? Strong-handed traders are traders that come in with a large force and large position sizing to actually make moves, right? Weak-handed traders are the ones that are at the end of trends, which we don't want to be on, right? And the ones that are in the middle of the chop. So what we want to do is pinpoint where these strong-handed traders are, and they usually appear where it would be easiest to actually move price. So what does that mean? A strong-handed trader would appear at an area where volume actually drops off very aggressively, right, on a cumulative basis, where they can actually throw on larger size to actually move the market. So these strong-handed traders would appear at the tops and bottoms of distributions. So let's keep that in mind as we look to get into the screen, right? Because there we're going to be talking about not only strong-handed traders and how they are represented on a volume profile, but we're going to be talking about different shapes of volume profiles as well. Because the main trend reversal revolves around volume profile shapes, right? And where strong-handed traders appear in the market. We can use both these to confirm a strong trend reversal. So there's two main volume profile shapes that indicate some kind of trend reversal: the capital P and the lowercase b. Now, if we take a look at the capital P, for example, to begin with, what happens is there's a very slender move of volume that actually pushes price up into a point where there's a cluster of volume that capitulates, right? So you get this long extended wick to the upside where low volume realistically goes on a bid, and what happens is weak-handed traders are generally pushing prices up. At the end of the move, you get this sideways rotation that creates the capital P shape, where there's a lot of volume that accumulates in clusters at the tops. The theory-based approach behind this is that the weak-handed traders are starting to lose their touch and lose their footing right on the buy side. This allows for strong-handed traders to come in and start opening sell positions using the buy side as liquidity to look for the reversal back down. Now, if we take the lowercase b, it's the exact opposite, where there's a low volume push that drops, right, into a key area, and it's weak-handed selling that makes this push. And at some point, these weak-handed sellers, they're probably getting trapped and they're getting exhausted into lows, allowing for strong-handed buyers to see this as an advantageous position to start loading in size to get that reversal. So we're going to use the combination of that theory mixed with where strong-handed traders should appear along with different volume profiles when we jump into the screen so we can identify where these reversals are to a higher degree. So if you guys are ready to find reversals in the market based on volume profiles, stick around because in a few seconds we're going to be right at the screen. So I'll see you guys there. We are back behind the computer, and I'm going to explain to you exactly what we are looking at here so we get a better understanding and actually be able to follow along and identify these large market reversals based on volume. So here on the right-hand side, we have our trusted 50-day profile, and here are individual sessions of profiles, right? These individual sessions are an attachment of the TPO and the volume profile chart. The extended trading hours is the green TPO, and its little counterpart is this volume profile, so on and so forth, right? The blue value area on this TPO is based on the regular trading hour session. This is little buddy here, the volume profile. So we also have the large volume profile here, the 50-day, that has multiple curves and whatnot and different shaping. Now, if we want to understand the reversal patterns, first and foremost, what we're going to have to understand is the capacity of strong-handed traders, right? So these strong-handed traders that appear in the markets, they are going to generally appear where there is a drop-off of large volume, right? Where you have these drop-offs here that create different distributions, right? They create these different distributions. These are where these strong-handed traders are going to appear. So if you look at our videos on distribution theory, what this dictates is that prices move move from distribution to distribution. If you start entering a distribution from the downside up, right, there's a directional trend to the upside and vice versa. So if we identify that strong-handed traders are based around these ledges, right, we can also identify that strong-handed traders are based on specific color schemes that are found in the volume profile. So this volume profile allows us to see color, right, volume in relation to the point of control. Right, the point of control is an area at which, right, the most volume is traded. So if we give the point of control a value of 100%, right, you can find this on different platforms. It's generally a heat map of volume for an individual day. That means that volume that surrounds the point of control is most likely going to be less than 100% of the max volume, and it's going to be distinguished by a specific color, right? From green to blue, we have very high percentage of volume in relation to the POC. That suggests that there's a lot of volume at those areas. So strong-handed traders, right, they generally appear at these ledges, but they're also going to appear in the form of very thick volume. You can see there's confluence with the key ledges and these thick volume areas, right? So keeping that in mind, the next step is going to identify where there's specific shapes in the volume profile, right? We can split this into two different distinctions in terms of market reversals. Number one, purely volume based and strong-handed trader based, and then two P and B shape profiles, right? And then the best is going to be adding them together to create this massive confluence. So a P-shaped profile, right? What does that look like? Just find one. So P-shaped and B-shaped profiles, they're not going to be everywhere, right? They're not going to be at every chance that you get for the reversal, right? They're not going to be extremely obvious. Over here, we can identify this as a B-shaped volume profile on the regular trading hour session. Over here, we can identify this as a P-shaped volume profile on the regular trading hour session. So what you'll note is that volume, right, is very thin, denoted by red here. Red volume is very low volume. That creates a move from top to bottom of the market move. Very thin tail over here. Then at a certain point, right, there is somewhat of a tail here, but at a certain point, what happens is a lot of volume accumulates at this point of control. Now, I'm more interested to understand where the blue and green volume is away from the point of control to add to the confluence, but generally speaking, what happens here is that we have a lot of volume in and around this low that's been created, and we can see where these larger volume profile ledges appear, right? There's a ledge here and here, right? This block right here is a massive support structure for price, right where we have confluence of a plethora of volume and this B shape. This generally suggests that this is going to be a reversal back to the upside, and we fly from 43.50, let's say, all the way up into 44.20 or so. A very significant 70-point move, right? This is very large. A 70-point move, to put that in perspective, right? Is $3,500 a contract on the S&P 500 futures. Now, if we take a look at the P shape over here, this P shape is a very similar situation, but the reversal. You get this long extended move on very thin volume, and then all of a sudden, right, all this volume cluster happens to be created at the top of this area, right? Lo and behold, right where there is a massive volume profile ledge where strong-handed traders are waiting for the sell side. So there's a plethora of volume accumulated here where we could expect to see that actual market reversal, which eventually turns into this massive downside move. Not only the next day, the next session, the following days after that, before we get this larger dump. Now, generally speaking, I like to identify lows and tops
by these individual session profiles based on P and B shapes, along with massive volume. So what we can do is we can create confluence based on the actual strong-handed traders, where thick volume is, and the shape of the profile to break down where market reversals can actually appear in the futures market. It's one of the best tools that can signal prices are actually going to turn, right? So we can see, we can denote, okay, around 44, 10, 15 area currently is going to be the top of this session, right up to 20-ish. That's where the large ledges from prior volume in this area. So from 10 to 20, we would expect a topping out pattern on this current market environment from December 16th. You can see the red arrows are where the prices close on that session. So let's take a look at what it would look like on an actual chart. So on the 16th, as you have it, right, we have a top that was created earlier in the day. And around that 10 area up to that 20, right, you have 1, 2 failures for very large extended downside moves, right? 20-point movers and more. You can see, right, this right now is some of the overnight session. Then this is the current day session that starts over here, down into these lows, right? Very significant move, 40 points. So the next day session on the 17th starts up here, and we have to understand around 10 to like 15, 20 is where that large reversal should take place, right? We hit that area and we get this very large significant move to the downside based on our confluence. So you can see how this works, and it's a great tool that I think a lot of people should take into consideration when you're trading, so you can find those reversals and, right, don't get chopped up trying to pick counter trend moves for the fade. Understand where they can come out from and how they can be found with confluence rather than losing a lot of money trying to counter trend trade this. So let's dive into this outro, and I'll see you guys in another video.
Now, I hope you guys learned a lot about market reversals, where they can be found, how they can be sniffed out, right? And what it would take for markets to reverse to end a trend based on volume profiles. So now, when you see a large trend and you're not on it, you're not going to be counter trend trading the whole way through, just blowing money until it eventually reverses and you're again on the wrong side. So I really hope you guys thoroughly enjoyed this video, and I want you guys to drop a like, drop a comment down below. What else would you like to see from a volume perspective to identify trend movements or so on and so forth in the futures market? If you're new to the channel, hit that subscribe button. I'll see you guys next time.